Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on gold market. So on the gold market, actually, as other markets have ignored mostly the statement from the European Central Bank, because in current circumstances the measures that they have offered to public opinion, to investors, seems, well, too weak. So it's not the steps that in general markets expect from the European Central Bank. But at the same time, later, when we've got the CPI numbers, it has made an impact on the gold market as well. And inflation numbers stand around 8%, so it's really high inflation. But at the same time, we have to say that actually these numbers are not include yet the effect of the capital flow out from the European Union. So this data stands mostly for the February. And the first fruits of the money flows we should get in April and probably mostly in May. So that's why, despite what we've got 8% inflation now, within the couple of sessions in a couple of months, we could see some easing on the pressure, at least theoretically. If this will not happen, that will tell us that the situation in the United States stands really awful. So this is the data that we need to keep an eye on within the nearest time. Speaking about our current situation, here we have some bearish moments that makes us think that maybe indeed it would be better to wait for a bit deeper action on the gold. Market keeps some minor chances on upward action right now, but based on the swings shape and on market performance, it seems that chances stands in favor of the bears. At least if you do not want to go short or take in the short position, it would make sense to wait or make a decision on the long entry. And the reason mostly because of the reaction on the recent inflation data. So on the daily chart, we do not see something really special. The huge engulfing pattern that has been formed tells us that probably whether the pullback happens or not, later we should get downward continuation, which means that retracement might be a bit deeper, just because of the feature of this pattern. It usually takes the shape of the ABCD to touch the target. From that standpoint, things that we told yesterday concerning this level stands correct. So because this is really good support, the confluence, and accompanied with the daily reversal, which provides good support and makes attempt to go long right here more or less riskless, because the upward bounce here, some technical response probably should happen. And this is the reason why we yesterday also said that probably it might be a bit deeper action. If you'll take a look at the hourly chart, take a look at the overall price action. First of all, we're getting here some kind of the hand shoulders is forming, which is also potentially bearish, and stands absolutely in a row with engulfing pattern on the daily chart. But the question is, from what point downward action will be reestablished? It might be either right from here, and so already could be treated as a downward action, should be accelerated, for instance, or we still will get a kind of the ABCD reaction to reach the 618 level, as it followed by the idea of the Brent body trade, and after that, this market could keep going lower. This is the major tricky moment. So, setup that we here is talking about mostly for those of you who are ready to take the risk of the possible downward action. Just to come down you a bit, I would say that this setup needs very tight stops. So risk of this trading stop is very small. It's just because we're taking a long position right here, you will have to place stop slightly below this area. Because of the shape of the pattern. So actually we have the cartridge triple to buy, and it should start right from there just because this ABCD pattern is mostly completed. The market could start upward action. If this will not happen, and market start dropping below these lows, it means that we should be ready for another drop somewhere to the next, for 20 bucks approximately, just because to the next of the confidence support on the daily chart. It's right here. This is simple logic, but the tricky point with this taking a position here stands with the price performance. So take a look. In general, we have a kind of the head and shoulders minor pattern here, and everything was going well. So until CPI numbers have been released, it was making pressure on the price and start dropping. So this erodes the shape of the head and shoulders, which is actually a bit tricky moment, and it might suggest that, well, at least it significantly decreases the chances of the success in the current situation of the taking the long position, the possible possessing on the possible upward action. But at the same time, it is not totally destroyed, as we have another bullish pattern here might be formed. And well, this is I wouldn't call you, I'd not want to call you for taking the long position, because I'm not sure that definitely we could get success with this trade. But I have explained the setup, and theoretically it has chances to work, and it has very small risk. That's why this is the advantages and disadvantages. You could try to analyze them by yourself and make the decision. Would you like to trade this setup or not? For those of you who are not ready to do this, it's more conservative. In this case, we need to wait a bit more and see what will happen around next support, which is right here. So that's the very simple situation currently. So let's keep watching what will happen. If you would like to go short with this engulfing pattern, the same story, you have the same question. So whether you would like to take position right now, but in this case you could get the risk of the possible ABCD pattern to the upside if this scenario will work. So you will have to place stop somewhere higher, and in this case it's also a question what will be the risk-reward ratio for this trade. That's why for the taking the bearish position, it also makes sense maybe to wait or use the stop sell order. So if you would place the stop sell order right here, and you will take the position in the moment of the breakout, probably it will be even safer than trying to catch the possible target of the retracement, placing somewhere far standing stops. This will be just more risky in the current situation. So here are some thoughts for you to think about and make the decision what you will be doing on gold market.